This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news that while officials cut policy interest rates, markets are bidding up benchmark bond rates. But first, there was another aggressive fall in the level of American mortgage applications last week, down almost 7% from the prior week and extending the 17% plunge from that earlier period. But they are 3% higher than a year ago now. Mortgage interest rates have been rising, although they held last week at 6.73%. But they're still well down on the year ago level of 7.16%. Perhaps the fall in mortgage applications is due to the weak state of their housing demand. Existing home sales fell 1% in September from August to an annual rate of 3.84 million. That is a 3.5% dip from a year ago. They're on track for their worst year since 1995. American money isn't invested in housing, it's in financial markets. There was a well-supported US Treasury 20-year bond auction earlier today, which delivered a median yield of 4.53%. But that was an outsized hike from the 3.97% at the prior equivalent event only 1 month ago. And the US Fed released its October Beige Book review of the surveys in all its districts, and it was unremarkable, only finding modest improvements. American petrol prices keep on easing at the pump, now 11% lower than year-ago levels. And as widely anticipated, Canada cut its official interest rate by 50 basis points to 3.75% overnight. They signalled they will continue to chop the rate should their economy develop as expected. The decision increased the pace of rate cuts following 3 25 basis points reductions, and this aligns with their recent sharp slowdown in Canadian inflation. Some expect another 50 basis point cut at their December meeting. Singapore's core inflation rate rose again, but only to 2.8%. The central bank version is different from the normal CPI there because it is the one most influential on their rate settings. And Taiwanese retail sales are up 3.2% in the year since September, and their industrial production was up 12.1% on the same basis. In China, it's still a long way off, but the retail event known as Singles Day, or 11/11, has kicked off with early promotions and by some official reports is building momentum. It is a world-scale retail event, probably larger than Black Friday in the US and elsewhere. And staying in China, they are raising their petrol prices again, their 9th rise of 2024. They blame rising crude oil prices, which is a bit of a reach given they've fallen 13% over the past year. Consumer confidence in the euro area improved in October to its highest level since February 2022. This was as expected, though. However, it remains negative, but has now risen back to its long-term average for the first time in 32 months. The US Treasury 10-year yield is now just on 4.25% and up 5 basis points from this time yesterday. And the price of gold will start today at $2,720 an ounce and down $22 from yesterday. And oil prices are down $1.50. It's $70.50 a barrel in the US, while the international Brent price is now just over $74.50 a barrel. And the Kiwi dollar starts today at 60 US cents and down 40 basis points from yesterday. Against the Aussie, we're unchanged at 90.5 Australian cents. Against the euro, we're back down 20 basis points at 55.7 euro cents. That all means our trade weighted index starts today at just on 69 and down 10 basis points from yesterday at this time. And the Bitcoin price starts today at $65,928 and down 1.5% from yesterday. Volatility over the past 24 hours has been modest, also at just under plus or minus 1.5%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.